It's 1930, you own your home, and in 90 days you're going to lose it. You never missed a payment. You paid every month for 5 years, but your mortgage was never built to be paid off. It was built to end. And here's the thing nobody tells you. The 30-year mortgage did not exist yet. Someone built it on purpose to end the exact nightmare you're standing in. Your grandparents' home loan would terrify you. Today, the bank slides a menu across the desk. 15 years, 30, an adjustable rate ready to climb on you later. 9 in 10 Americans still sign the 30 without blinking. And once you see what a mortgage used to be, you'll understand why the long one felt like a miracle. Because before the Depression, a home loan was a short, brutal thing. You put down half the price of the house in cash. Half. The loan ran 5 years, sometimes 3, and you paid only the interest. Every month, interest and nothing came off what you borrowed. Run the math in the old way. You borrow the price of a house, you pay for 5 years, and at the end, you still owe the entire price in one giant payment. Almost nobody had it. So you refinanced again and again for decades. You never bought the house. You rented it from the bank and paid for the privilege. In 1929, the music stopped. Banks failed by the thousands. The ones still open wanted cash, so they called the loans due and refused to refinance. Millions of families had paid faithfully for years and still owed every dollar. By 1933, 1,000 homes were foreclosed every single day. People who did everything right lost everything anyway. So the government did something radical. In 1934, Roosevelt's people rebuilt the loan itself. A new agency bought up the failing mortgages and rewrote them into a shape nobody had seen. A loan where a slice of the balance came off every month until one day it reached zero. No balloon, no refinance. They stretched it over 15 years, then 20, then 30. Here's the quiet genius. And the longer the loan runs, the smaller each monthly payment gets. Stretch it to 30 years, and a family on a single paycheck owns a home. Your first payment is almost all interest in a few dollars of the house. 30 years later, it flips. Slowly, invisibly, the house becomes yours instead of theirs. Then came the second move. The government promised to repay the bank if you ever stopped. A guarantee turned a 30-year gamble into a safe bet, and banks demanding half in cash now took 10% down. A company was born to buy these loans so lenders never ran dry. You know it today as Fannie Mae. But run the math on who got in. When the government mapped which neighborhoods were safe to lend in, it outlined the black ones in red. Same paycheck, same job, wrong street, and the miracle loan never reached your door. The 30-year mortgage built the American middle class. It also drew the line for who got to join it. So the next time the bank slides the menu across the desk and the 30 feels ordinary, remember it is barely 90 years old. Your grandparents never pictured it. A home you pay off slowly, on purpose, until the day it is fully yours. The free market did not build this. A country climbing out of a hole did, deciding a home should outlast a crisis. The loan feels boring now. Boring was the entire invention.